Hey everyone, as we start a new trading week, I wanted to make you aware of one simple line that we can draw on a whole bunch of indices around the world. These are equity indices that speak for more overhead resistance as we go through the foreseeable future. We're going to start off with the Russell 2000. This is the ETF, the IWM ETF tracking the Russell 2000. What we're looking at here is a chart that goes back about a year and a quarter. So basically ever since we started breaking out in January 2021, we've been forming this sort of topping pattern, and we finally broke below it in January of this year, 2022. And now that overhead support that acted as such nice support is now becoming overhead resistance. So that's the Russell 2000 Small Capitalization Index here in the United States. But what if we go a little bit more global? So let's have a look at, for example, the German DAX. Look at that thing. That thing started breaking out above in the spring of 2021. Then that had a lot of support at the same visible area as we just saw in the Russell 2000, broke below it earlier this year, and then found it as resistance. So again, same line, completely different index. Not only a different index in terms of different countries. The Russell 2000 is small cap. The DAX, of course, is large cap German equities. Let's do maybe one more. How about looking at the EURUSD 50? That is an index that is also, as it says, in Europe. Same line, same visible idea. You can see broke higher there in the spring of 2021, found a lot of support, and now it's finding resistance. And if you extend this analysis a little bit further, you can see something like the NASDAQ 100, which I've referenced to here before, has found a lot of resistance at not that line, but at very similarly important areas of resistance. What I have here is the NASDAQ 100 with a whole bunch of moving averages, particularly the 100-day, the 150-day, and the 200-day, and you can see how they're all coming together here and found as resistance. So simple analysis, but it does speak for overhead resistance. Not that stocks have to fall apart from here or can't go up at all, but just broadly speaking, overhead resistance from a technical perspective that I think is going to require quite a lot of heavy lifting if equities want to be able to overcome that. I'm going to leave you with, again, the visuals of the Russell 2000. And of course, our market rover trend following algorithm took us out of these trends, out of the bullish trends a long time ago, many months ago. So having a process and a tool that allows you to stay in trends, but allows you to get out, more importantly, when the trends change, I think is paramount to be successful in the markets. Hope it helps. We'll see you again soon.